Starting with the bigger picture on the SPX, folks, there isn't a lot more that I can add other than, I hope some of you learned a lesson of what we saw in the metals market. You get to a certain point where the market gets so dang stretched, the reversal is often quite powerful. I warned about it in the metals market literally days before we got that big reversal. And I'm warning you about this in the SPX. We are at the same type of extended move in the SPX. This is an unusual extension that has not seen much in the way of pullback. Ultimately, pullbacks happen. No question about it. It's human nature. And we'll swing from positive sentiment to negative sentiment. And the change happens quite rapidly, especially when you get very extended to one side. And that's where we are. Now, does that mean extended can't get even more extended? Absolutely not. Again, we saw an 8 times extension in the metals complex. So yes, we won't see that won't likely see that in the equities. Metals are known for ridiculous type extensions, and that's even more ridiculous than I think they've ever seen in its history. So is it something you should expect here? Absolutely not. But when you see these types of extensions, folks, you really have to say, wow, do I really want to be taking as much risk as I'm taking now? So now is a great time to really address how much risk you are taking. The divergences that have developed on this are extreme at this point. Again, we can go even higher, and the market is trying to set up for that now. But just recognize, you need to have a risk management plan here. Bigger picture, yes, we're still trying to complete that rally off of almost a year ago, the low. And we still do not understand or have any strong indication about which path this is going to take going forward. As once we get the bigger pullback, it's coming. But once we get it, the question is, what is the path we're going to take after that? And that really will only be determined by the nature of the bounce that we get off of this low, off of this low. Now, of course, if we get a clear 5-wave down structure, then the expected path is going to be expected a corrective and then a big mini crash. That's red. But in the cases of blue and purple, they will look exactly the same on the way down. The only thing that will make a difference is how they rally. Blue will clearly be an impulsive 5-wave structure, followed by a corrective structure, which can allow you for a long trade. And then you're looking for another big rally into the end of the year. If it's purple and it's clearly corrective, you're looking for 5 waves down. That's clear. A corrective bounce after that. That'll be your 1-2 setup that you could potentially short, and that'll give you your mini crash. So we're not going to know. We've been waiting for this. Look at this. This is what we've been dealing with for half a year now. This is half a year's worth of work, folks. And as you can see, yeah, we have gone a little bit higher, but it's only been marginally higher each time. The market is struggling up here, and there's a reason. It's beyond stretched. So again, you have to determine how much risk you want to take. Would I necessarily be trading this market? Well, to be honest with you, if I get the right setup, I would on the long side. But that's only if I get the right setup. Otherwise, I'm looking at individual charts that have much better setups. Let's look at to the smaller degree on this 60-minute. Saying the same thing. Look at this. This is what we've been dealing with for months now, guys, for months. So right now, we do have the potential for the C wave higher. It's definitely on the chart. I'm going to show you this on the 5-minute. This is the potential for the C wave higher. The question is, can we get a solid wave 2? Right now, what's going on in the ES? ES is trying to break out again. I'm going to watch the 618 off of this. How this market plays out here will be key. I much rather would be viewing this as this being an A wave, this being a B wave, and then getting a C wave. The problem is, if we're getting such a high consolidation, that C wave may not break below the 382. So if we see a 5-wave decline here, folks, you may want to consider buying that as we're bottoming in the 5th wave, and that could be all the 2 you get. We may not get down to the target. So, and is it possible that this is all we get for the pullback? We've seen similar things happen since April. So I can't say the answer is it's an impossibility, certainly well within the realm of reasonable probabilities, but it's not something that I'm willing to buy and make that assumption right now, depending on how it plays out in here. If we get another 1, 2 up here and then break out, I may choose to buy that breakout, because a setup like this on the ES is pointing us likely to the 7,300 to 7,360 region, just to complete wave 3. And that's on the ES. You have to do the conversion for the SPX. So that's just wave 3. So, let's take this one step at a time and see if we can get more of a reasonable wave 2 on this. If we do get a more reasonable wave 2, I would look to buy that for a trade. That's me personally. Okay, I want to see how it develops.